Hello everybody, welcome to another update on the stock screener. Today I wanted to talk about a new gem that I found. It's amazing that I keep finding new ideas, but yeah, I just keep finding them. So I was looking at nickel. I wanted to invest in nickel because you can see the price is skyrocketing, and we know that nickel stock is very low and it's going lower in the future because everyone is going to go to EVs and battery metals, and nickel is one of the key components of batteries. So stock level is going to zero. So we need new nickel supply. And as you can see here, this is just going to skyrocket. So I wanted to look at companies that have significant exposure to nickel, and I couldn't find any. The only thing that I could find was Vale, which has around 10% in nickel. You also have Nova Royalty, which has 20 to 30% in nickel, but the problem is they are not in production. So they are going to production somewhere in 2027 or like that. And I don't want to buy companies that that aren't in production yet. So Vale had exposure to nickel, but it's not enough for me, 10%. So I checked further and my eyes came on the following company, Eramet. It's a French company and it has nickel and significant amounts of it. So the share price is creating some uh, cup formation here and it is starting to rise. So I think this is a very good investment. So I looked at the numbers. So you can see the numbers here. Market cap 3.5 billion US dollars. Revenue 1 times revenue. So that's already very interesting. It's only trading at 1 times revenue. The EBITDA was 1.5 billion for this year. Free cash flow 1 billion. Net income half a billion. Equity 1.5 billion. So we have these numbers here. Price to EBITDA 2. So very cheap. Unbelievable that I still can find companies with price to EBITDA of 2, which is amazing because I'm just going to buy a lot of it. Price to cash flow, free cash flow after capex, only 3.9, very cheap. PE of around 7, and yeah, this is a bit higher. Price to book of 2.5. So this is the only number that's not good, but all the other numbers are fair value, okay? And there's a bit of upside, like 50%. Now, look at this. They have 30% of their revenue in nickel. That's pretty high. Uh, I can't find any other nickel producers that have 30% in nickel revenue. The only thing that I can find are explorers, developers, but nothing really in production. So this is actually the only company that I found with significant exposure to nickel. So take a look at the revenue and EBITDA. You can see they have some operations in manganese, nickel, mineral sands like titanium, and a lithium project. And very important, they are not in Ukraine and Russia. So Gabon, that's in Africa, Norway, France, USA, Indonesia, we have Senegal and Argentina. So pretty uh, low political risk. And what caught my eye is this here. So nickel is about 30% in revenue, but the EBITDA is only 100 million. So if nickel starts rising, then revenue will start rising rapidly while the costs will stay the same. So that means that EBITDA is going to rise tremendously, could double, triple from here. So this is why I think Eramet is the best company that I found to invest in nickel because it has high leverage to nickel. So if nickel would double, let's say doubles, which is easily possible, that it would go from 12 to 24, okay, then we could have a turnover of 2 billion, and that would add immediate 1 billion in EBITDA, okay? 1 billion in EBITDA. Think about that. So the EBITDA now is 1 billion, 1.5 billion, and we add another 1 billion to that. So this is a high leverage play on nickel. Let's take a look at the numbers. So EBITDA is positive. It went up here, probably because nickel went up, and yeah, so that's why we see the spike. Net income has gone positive. It was negative in the previous years, but I think with the nickel price going up, this is going to rise even more. Revenue is stable, and they have some debt, negative debt, but that can easily be paid off in a few years. So pretty good earnings, right? And upside on nickel. The equity is around 1 billion, which is this number here. And here you can see the numbers. Okay, so I'm not making numbers up. You can find them here. Now, this is the first thing, okay? PE of 7, very good valuation. Now, I'm not done yet. Now comes the cream of the cake. I don't know how you say that, but creme de la creme here. They have a lithium project with 51% ownership in Argentina. Mine life, more than 40 years, maybe 100 years, okay? So here are the production numbers, 24,000 of lithium carbonate, cash cost around 2,500. The price of lithium right now is at $80,000. This is in Chinese yuan. So I expect lithium to keep on rising. So 80,000, and let's calculate what the valuation is. So we have production times, you know the drill, times price, 80,000 minus costs, 3,500 times 5 multiple, 51% ownership, and then we take 1 billion here. So what do we get? 4.7 billion valuation. 4.7. What is the market cap? 3.5. So this lithium project can easily double the market cap of this company. Easily. So what was the capex? 400 million. It's already fully financed. And they are already starting construction this year. So production is going to start in 2024. I know you need to wait 2 years for this to happen, but I think it's a good investment. So in 2 years, this company is going to double, and probably lithium will be even higher, so let's say triple. Now, what is very important here is this here. Look at this. This is a new lithium extraction process. that they developed. And they are the first European company to actually do this. They are creating lithium with a new process. So let's see what the process is. The current process is that they just evaporate the spodumene and then convert it to lithium carbonate. But that takes a lot of time to do. Evaporation is not a sustainable business. Okay, this is. So what is happening? They put the lithium brine in here and absorb the brine into these things here, and that will go to a membrane with none of filtration. So the lithium will go here, which is following this pipeline here, and then they are going to use reverse osmosis to get the solvent out. So that's the water, and that's going to be recovered back into here. And then we have the solute, which is then further concentrated here. So more water recovery, and then they are going to add sodium carbonate, which is available. You even eat it, that's sodium carbonate, and then you precipitate the lithium out of this to generate lithium carbonate. And why is this process so good? Because it achieves 90% yield in 1 week. Okay. Traditional methods are 50% yield in 18 months. Can you grasp that? 1 week versus 18 months. And the water is now being recovered for 60% instead of evaporated. So this is a groundbreaking extraction process, and I guess that they are going to license this out to a lot of other companies, and probably, yeah, I think they will even push away the competitors, because nobody is going to keep on evaporating lithium. They are going to use this process. Okay, that's the future, and that's also why the costs are so low. These are first quartile costs. You have evaporation costs for the traditional extraction process is around $5,000, $6,000, $7,000. This is only 3,500, and much faster with only 1 week of processing time. So this is the best way of extraction. So that's this active solid extraction. Also important, they have two other methods as well. Geothermal extraction, which was successful in pilot trials, and they have lithium recycling process. So they are also working on recycling lithium from batteries, which is also successful. So these two are coming and will add more upside to this company. So they have been testing this active solid extraction for multiple years, and they use this method to concentrate it, coming from the French Institute. It's like a sponge to concentrate the brine, and then they do some filtrations and purify it into the end product, which is lithium carbonate. Financing, as I said, is secured. So this Qingshan company has funded almost all of the capex. 375 million, and Eramet only paid 25 million for it. So now they have 50-50, and there is not a lot of capex coming from Eramet. So here you can see construction is starting right now, and in 2 years we will go to the 24,000 production of LCE. So, yep, this is the upside. A double in 2 years. I think this is a very good investment, especially with this new extraction process that they have. And you can be sure that even without the lithium, we are at fair value. Okay, PE of 7. And you get upside from the nickel, which is also an important metal. Okay, so actual Eramet looks like a battery company to me. Manganese is also used in batteries. Um, when you look at the composition of batteries, there is manganese in it. So you can actually say that Eramet is a battery company with the lithium, nickel, and manganese. So, yeah, very good investment, very ESG as well. And I'll see you in the next video.